Stocks on Wall Street end the trading session higher following a strong June jobs report. The Dow Jones jumps as much as 300 points, while the S&P 500 and the Nasdaq set new records. Asian markets open largely lower as investors assess Wall Street's job report and Trump's trade deals. The gift Nifty is indicating a mildly positive start for the Indian market. Crude oil prices hold steady while gold slips as solid job market bolsters the case of U.S. Federal Reserve's keeping the interest rates on hold. Market regulator SEBI bars the U.S. trading firm Jane Street Group from accessing the local securities market. Unlawful gains worth 4,800 crores to be impounded, making it the highest in Indian history. Banks where Jane Street entities have accounts ordered to ensure no debits made without SEBI permission. Donald Trump's tax cut package clears its final hurdle in the U.S. Congress as Republican-controlled House of Representatives narrowly approves the massive bill and sent it to the president to sign into law. Hello, good morning. You've tuned into CNBC TV 18 and you're watching Power Breakfast with me, Vinny Motiwala. An interesting day that's going to be shaping up today. Now, looking at the Asian markets as of now, most of them have opened up on the positive footing. Now, Taiwan Index and Hang Seng on the flip side have opened up in the red. But yesterday, where we saw ASX 200, which was declining, today that's opened with gains of almost 0.3%. We're seeing Nikkei managing to hold on to gains of 0.3%. Shanghai mild gains coming in on that front as well. So yes, some of them are seeing a decline. Mixed opening, mildly positive start for the other ones as well. Nifty implied open, that's the important one to watch out for. Given that the jobs data that's coming from the US has been good, so Nifty implied open, a mild positive start is what we are watching out for in terms of the Indian market as well. Nifty implied open will be key to watch out for. 17 points uptick as of now. Now, does this actually sustain or will we see it go in the red that like we saw during the week as well will be important to see. As of now, a mildly positive start for the Indian markets. But how did the US markets close? Like I was mentioning, right? US markets closed at record highs. Nvidia rose close to around $4 trillion. And as investors were welcoming that US jobs report that came in, Dow closed with gains of more than 300 points. S&P 500 gained 0.8%. And Nasdaq, that gained 1% as well. According to the Bureau of Labor Statistics, the non-farm payroll that rose to 1,47,000 in the month of June. We have Rick Santelli of CNBC who's joining in with us to give us details on this one.
Rearview mirror, it was the June jobs report. And many trying to get very much a sharp pencil under the microscope glimpse of the breakdown between government and private. Interesting, but do remember, these numbers are seasonally adjusted, and that process sometimes make exact head counts in various areas a little questionable. General trends, maybe, but the sharper the point, the more you need to acknowledge that there are adjustments. These aren't raw data points, they're modified. And we all learned during COVID, and before and to some extent still, seasonalities change, and sometimes the adjustment process isn't as quick to be retweaked as many of us would like. Finally, the details. 147,000 jobs, significantly better than what we were expecting. A drop in the unemployment rate to 4.1. That alone is worth the price of admission in terms of the Fed, because I just don't see any easing, obviously, at the July meeting with these types of numbers. And even at the Fed meeting, we have some job reports in between now and the September meeting, September 17th. But it certainly has been an exercise in understanding the half-full, half-empty dynamics of the economy. Many continue to look for the bad news that doesn't seem to come. And what's interesting with that type of philosophy towards the markets, we've seen that we haven't had a huge amount of bullishness, thus we've seen a huge rally. Sometimes when everyone is bullish, markets have a tough time going up. This is the exact opposite. Very few bulls out there, and the dynamics of the economy haven't rolled over. That's turned out to be quite a wild mix to the upside as the S&P and Nasdaq continually flirt with historic pricing records. Even the Dow is only about 1% behind its all-time high as well.
Okay, thank you so much for that. But that's all the global market action that we have for you all this morning. How are all these overnight cues going to be impacting our Indian markets? We have a team of research joining in with us to set you up for trade. Which are the important stocks to watch out for? We'll give you all of that in a Power Prep segment. Holmas, first up, good morning. And what are we watching out for in today's trading session? US job report surely seems to be strong, but will India be actually reacting to that, or a mild muted week is what we would be ending Friday with as well?
Morning, Vinny. And aside of the US jobs report, there are plenty of domestic triggers itself that we need to keep an eye out for today. It's typical. The week has been such. We've struggled to cross higher levels, consolidating in this 200-point range of 25,400 and 25,600, 650 on the higher side. And it's been this yesterday as well. We tried crossing Monday's high, failed to do that. But the good part was we managed to defend 25,400 on the downside. Yet again, the only negative bit though was, unlike Wednesday, we ended very close to the day's low. So that important 25,400 level will be a key monitorable to watch out for. A principal culprit has been Nifty Bank, which took the index higher last week, is dragging the index lower this time around. It's down almost 800 points from the record high levels. And the banking index will continue to remain in focus today, be it the private banks, be it the PSU banks. There have been a slew of business updates that have come out last evening. So all of them, be it RBL, Bandhan, PSU banks like Bank of Baroda, UCO Bank, all of them will be reacting to these business updates that have come in. Of course, devoid of global cues today, because US markets, though they ended higher yesterday, they were short. It was a short trading session. Today is a holiday, and the India-US trade deal continues to remain a key monitorable. So for now, it's indicating a cautious start for the GIFT Nifty. So keep an eye out on our markets today.
What we're watching out for. Look at the Nifty implied open as well. When we started the show, 17 points up, and now very, very flat, right? 0.40 points is what it's indicating. So flat start, cautious start is what we're watching out for. Let's move on and talk about which are the important stocks to keep on your radar this morning. We have Upasna joining in with us for that. Upasna, good morning.
Good morning, Vinny. Well, lot of stocks on our radar today on the back of Q1 updates. First up, let me start with Marico. The consolidated revenue growth on a YoY basis stood in low 20s. Next is Bajaj Finance, reported a strong Q1 update. AUM saw growth of nearly about 25% on a YoY basis and 6% sequentially. Bajaj Housing also came up with its Q1 number with an AUM growth of nearly 24% on a YoY basis at 1.2 lakh crore. Bank of Baroda, domestic deposits up 8.1% and domestic advances up 12.5% on a YoY basis. Bandhan Bank also came up with its provisional Q1 numbers. The total deposits up 16% on a YoY basis and 2.3% sequentially at 1.5 lakh crore. L&T Finance also reported a strong Q1 update with a retail disbursement growth of nearly about 18% on a YoY basis and 17.5% sequentially. Vedanta is the next one on our radar with the aluminium production up nearly about 1% and flat sequentially, and saleable metal of this is down about 7% sequentially and down 5% on a YoY basis. IEX came up with its June update. The electricity traded volume is up 6.5% on a YoY basis. And next up is ONGC. The company has signed an agreement with Japan's Mitsui O.S.K. Lines to build, own and operate two very large ethane carriers is what the company has indicated. And lastly, Emcure also in focus, as according to our sources, Bain Capital is likely to sell 2.4% equity via block deals on this counter. So all in all, lot of stocks on our radar today.
Absolutely, Upasna. A whole list of stocks that are going to be on and in focus in today's trading session. But finally, Mangalam is waiting by, as always, to tell us what is going to be happening in the world of F&O. Good morning, Mangalam.
Good morning. So if you look at, the way the market fell yesterday, it seemed like it was an expiry-related move. Why do I say that? Because if you look at, the intraday charts of the Nifty Bank, as well as, the key components, you would see it was only towards the end where the Nifty was holding on to 25,500. Those put writers suddenly had to throw in the towel. And then in the last hour, it was led by two index heavyweights. You had Reliance, which moved to the low point of trade, and we had HDFC Bank. So it definitely looked like expiry-related moves itself. GIFT Nifty is indicating a mild green start. The question I'll be, looking for an answer to is whether this last hour downtick in yesterday's trading session will get readjusted in the first hour of trade today or not. Just keep an eye out on the fact that the US markets are closed for trade today on account of Independence Day. So that implies that when the cat is away, mice will play. We will have a lot of domestic institutional investors, backing a lot of the mid and small cap stocks. The FIs, they continue to sell in index futures. So 2,400 crore worth selling yesterday, added 6,800 shorts, unwound 5,800 longs. And as a result of which, over the last 3 trading sessions, their net exposure on the short side has nearly doubled from 38,000 to minus 61,000. And the long contracts have come down from 37% to 29% itself. The important part, however, the Nifty, despite its volatility, is holding on to day's low. Yesterday's low was very close to the previous trading session's low, in fact, a shade higher. But at the higher level, around 25,600, we are facing some supply. That's something that we've seen over the last 3 days, Nifty high itself. So that's the broad range that the street is working with. In terms of the mid and small cap indices, like I said, the domestic institutional investors will be in focus. So keep an eye out on that one. And also watch out for Nifty IT. Why do I say that? Because overnight, Wall Street did extremely well. Trump's spending bill has passed. So if the US economy looks a lot better, then you have the IT sector which benefits. The Q1 results come in very soon as well.
Absolutely, Mangalam. Thank you so much for that. Keep an eye out on the IT sector going forward as well. That's an important update there. But more important updates coming in as market regulator SEBI has actually barred a US trading firm, Jane Street Group, from accessing the local securities market. Hormaz is joining in with us with more details on the story. Hormaz, good morning. And what is that update now we are picking up here? And how important will this be for our markets?
Good morning, Vinny. And big update coming in from SEBI this time around. And they have barred Jane Street Group from accessing the securities market in their interim order that was released last evening. And unlawful gains, according to the order, worth almost close to 5,000 crores will be impounded. And since this is an interim order, this amount will be deposited in an escrow account. And Jane Street has been directed to open an escrow account in any scheduled commercial bank. And the banks where Jane Street and their entities have accounts have been told to not allow any debits without the SEBI permission. Now, this all started last year when SEBI had asked NSE to probe any the activities of Jane Street to ascertain any market abuse. The report was submitted in November of last year, and in December it was that the regulator noted that there were certain entities that were running large risks in cash equivalent terms. Of cash equivalent in FNO terminology generally means highly liquid instruments which can be converted into cash and used for trading as collateral. And in February of this year, it was found that prima facie the Jane Street Group appeared to be engaging in activities which were in violation of the SEBI regulations. And as per the SEBI's order, NSE had sent a letter of caution to Jane Street to desist them from taking any positions that were manipulative in nature. And Jane Street had even responded to that in February. And in May of this year, it was found that Jane Street continues to remain in violation of the caution letter that was sent as well. Now, over the last 2 years, as per the SEBI order, the amount of profit that Jane Street has made through this index derivative trading activity comes up to almost 36,000 crore rupees, and this is across 4 entities. And this is analyzed over a period of 1st of January 2023 to March 31st of 2025. So almost 36,000 crore worth of profit through index derivatives. And this comes when a SEBI order had mentioned that 9 out of 10 FNO traders lose money in the derivatives market. Now, what is Jane Street? Well, they are a global proprietary trading firm employing close to 3,000 people, trading in over 45 countries, and they generally use algorithms to identify trading opportunities. So a big move coming in, almost nearly the largest ever impounded amount in history.
Okay, Hormaz, thank you so much for that. But on that note, we're going to sip into a very short break. Up next, we'll bring you India's Defence Acquisition Council, which has cleared the proposal for purchasing military equipment. We get you more details on this story after the break. The Defence Ministry has now cleared 10 proposals to buy weapon systems and military equipments worth 1 lakh crore rupees. So this is a big update that's coming in as well. And Parikshit Luthra is joining in with us to give us details on this front. Parikshit.
Well, this is another big boost to domestic defence manufacturing. The Defence Acquisition Council has cleared at least 10 proposals worth over 1 lakh crore rupees. Now, these are proposals for the Army, Navy and the Air Force and will go to domestic manufacturers. What does this really include? Well, the government has approved proposals for procurement of armored recovery vehicles, electronic warfare systems, integrated common inventory management system for the tri-services and surface-to-air missiles, which are very important for our air defense as well. Now, these procurements are aimed at giving higher mobility, effective air defense and better supply chain management to the three services and also boost the overall armed forces preparedness after Operation Sindoor. We've also seen proposals being cleared for moved mines, mine counter measure vehicles, super rapid gun mounts and submersible autonomous vehicles as well. Now, this is to mitigate potential risks posed to naval and merchant vessels. We've seen heightened tensions in the maritime domain over the last few months, and this is to boost the capabilities of the Indian Navy to provide security in the high seas. There will be a greater push for indigenous design and development, and these acceptance of necessity documents have been accorded under the by Indian, indigenously designed, developed and manufactured category. So this is aimed at boosting Indian supply chains and procuring from the Indian private sector.
Absolutely, Parikshit. On that note, we'll keep an eye out on those defense stocks also in today's trading session. Let's move on. And 2 days after imposing a fuel ban on old vehicles, Delhi government has made a U-turn now. The government has cited tech challenges and has said that ban is not feasible following public outrage over the proposed ban. Shivani is joining with us and she's filed a report on the same.
Well, it seems like a major rollback on policy. The Delhi government has put on hold the fuel ban for end-of-life vehicles just 2 days after its implementation. The move comes amid widespread public backlash, technical failures and concerns over enforcement infrastructure. The now suspended policy had aimed to deny fuel to deregistered vehicles identified through the ANPR cameras installed at fuel stations across Delhi. But the system, the government admits, is riddled with flaws. Cameras not working, sensors malfunctioning, and speakers not functional at many locations. In a letter to the Commission of Air Quality Management, Delhi's Environment Minister has said that the plan is premature and potentially counterproductive. The government warned that the Delhi-only ban would lead vehicle owners to procure fuel from nearby NCR cities like Gurugram and Ghaziabad, possibly triggering a black market of the fuel. Importantly, the government stressed the lack of NPR infrastructure in native states, making effective implementation across Delhi NCR currently impossible. So for now, it is a U-turn on the ban for fuel on end-of-life vehicles in Delhi practice.
Thanks for that, Shivani. In fact, let's also listen into what the Environment Minister in Delhi had to say about the fuel ban.
Because of the technological and extremely complex system and lack of integration with neighboring states, there is a public discontent and outcry. In these set circumstances, it is not feasible to implement this system where fuel is being denied to EOL end-of-life vehicles identified through ANPR installed at petrol pumps in Delhi.
Okay, on that note, we are going to slip into a very short break. After the break, we'll get you cues in the world of commodities, so stay tuned in for that. Welcome back to Power Breakfast on CNBC TV 18. Now, getting you the latest related on Trump developments, what has happened overnight over there. Dia is joining in with us, as always, in our special segment, Trump Watch. Dia, over to you.
Starting off with the big, beautiful bill, President Trump has secured a broad economic policy shift as the House passed his $3.4 trillion fiscal package on Thursday. The bill cuts taxes, reduces spending on key safety net programs, and rolls back major clean energy policies introduced under Joe Biden. Trump called it a rocket ship for the U.S. economy and announced he would sign it Friday at 4 p.m. in a ceremony at the White House.
We're sort of celebrating like the biggest bill of its kind ever signed, and it's going to make this country into a rocket ship. It's going to be really great.
Meanwhile, U.S. President Donald Trump said he did not make any headway toward ending Russia's war in Ukraine during a call with his Russian counterpart Vladimir Putin and expressed frustration at the ongoing conflict. President Trump said he wants safety for the people of Gaza ahead of his high-stakes meeting next week with Israeli Prime Minister Benjamin Netanyahu. The meeting is expected to focus on efforts toward a potential ceasefire in the region.
Still want the U.S. to take over Gaza as a part of a peace?
I want the people of Gaza to be safe, more important.
So that's
I want to see safety for the people of Gaza. They've gone through hell.
And despite earlier talk of diplomacy, the U.S. is ramping up economic pressure on Iran. The Trump administration announced new sanctions targeting companies involved in trading Iranian oil just days after U.S. airstrikes on Iran's nuclear infrastructure. Officials say the targeted network handled billions of dollars in oil shipments. Now, on the trade front, the White House may take its next step as early as Friday. Trump said letters could go out to trading partners announcing unilateral tariff rates with a July 9 deadline fast approaching for new trade deals. In response, Canada's finance minister said Thursday that Canada sees a clear path to negotiate a better trade deal with the Trump administration, pushing back on speculation that the country might be forced to accept baseline tariffs on all exports to the U.S. And from Europe, French President Emmanuel Macron is calling for swift movement on an EU-US trade deal. He said he wants an agreement as soon as possible with the lowest tariffs possible as the US deadline for a final accord quickly approaches. That's all for today. Now back to you, Vinny.
Thank you so much for that, Dia. But let's move on and talk about what's happening in the world of commodities. Manisha Gupta is waiting by to give us those details. Good morning, Manisha. What are we watching out for? Crude, gold? What should we keep an eye out on?
Thank you for that, Winnie. I'll start with the crude oil prices because we are up by 2% in this week after that very sharp decline that we saw in the crude oil prices in the previous week. Well, the U.S. is restricting trade of Iran oil. The U.S. Treasury and State Departments have announced sanctions against network of entities, shadow fleets of vessels involving in Iran oil exports. So that is what is adding premium to prices. The markets will also focus on the OPEC Plus meeting on 6th of July. An interesting report from Barclays says that they are now raising Brent oil forecast by $6 to 72 barrels per barrel for 2025, another $10 for 2026. They're looking at improvement in outlook for demand going forward. So one such initial reports coming in, which is supportive of the crude oil prices. What has seen profit taking, though, in the overnight markets has been the gold and silver prices. The U.S. dollar, the Treasury yields, the U.S. stock index rose after the U.S. payroll was above expectation and unemployment rate lower than forecast, and that has led to some profit taking in precious metals.
Okay, Manisha, thank you so much for that. So that's an update coming in on the commodities front, crude and gold, both where we are keeping an eye out on. But that's all the time we have on this edition of Power Breakfast on CNBC TV 18. Nifty implied open is indicating a very muted start, a cautious start for the Indian market. Keep an eye out on that. Up next, your Bazaar Morning Call to take you through all that action.